Last Wednesday morning, we woke up to the move that Bruce Linton, he's the founder and co-CEO of Cramer fave cannabis company Canopy Growth and a frequent guest on the show, had resigned effective immediately. When he called into Squawk Box, it quickly became clear that Linton hadn't simply resigned. He'd been terminated. Remember, Canopy's largest shareholder is Constellation Brands, STZ, the big alcohol company that you may know as Corona, Modelo, Pacifico, along with a host of fancy wine and liquor brands. Constellation actually reported a fantastic quarter late last month, yet hardly anyone seemed to notice because perhaps they were concerned that Canopy was spending its $4 billion Constellation Finance war chest too quickly, not getting enough bang for the buck. So let's go straight to the source and check in with Bill Newlands, the straight-shooting CEO and president of Constellation Brands, get a better sense of how his company's doing and what he plans to do with the Canopy investment. Mr. Newlands, welcome back to Mad Money.
Thanks. Good to be here.
All right, Bill, it was a dynamite quarter, and yet I think everyone was really focused on one line, which was you said we were not pleased with Canopy's recent reported year-end results, and then subsequently we learned, of course, that Bruce Linton was fired. Can you tell us what you weren't pleased by and why we should not be worried going forward about a Constellation Brands investment because of Canopy?
Sure. Well, as you and I have talked before, we still see this as a great opportunity. This could be a $200+ billion business over the course of the next 10 years, and Canopy is best positioned of anyone in the industry to take advantage of that. With that said, we recognize that there are some great opportunities to push this forward, to make sure that the right form factors are being invested in and that we are winning the markets that matter. And this move was all about making sure that we do all of that.
Was Bruce spending too much money versus the actual war chest that you gave him? And were you concerned that perhaps there wasn't enough, maybe the margins, the targets weren't right? What exactly was making you uncomfortable with what Bruce was doing?
Well, what we were really engaged on is the fact that we needed focus. We need to win Canada. It's a proof of concept. We need to win the United States, and our deal with Acreage puts us in a perfect position as Canopy to win the U.S. market as well. But our board was uniform. We were unanimous that we needed a different leader to take us to the next phase of growth.
Okay, so let's figure out what can you do at a time when it's still a Class 1 felony to sell cannabis in the country. What can you do away from the United States, or what can you do medically? What can you do in Canada that'll make it so that the $4 billion is going to give a shareholder a lot more growth than we think?
Well, one of the important things that we always talk about relative to the legality of it, particularly as it relates to the U.S., 68% of U.S. consumers think cannabis should be legal. And it's over 50% for any demographic you want to talk about. Men, women, various age groups, Republican, Democrat, Independent, all over 50%. So our belief is it won't be long before we, in fact, have legality at a federal level here in the United States. With that said, Canopy is perfectly positioned to win in the medicinal market in Canada. As you know, there's going to be opportunities later this year in edibles and in beverages as Canada opens up those additional opportunities. And there's opportunities in critical markets around the world, like Germany, as an example. So there's a lot of opportunity to make sure Canopy is well positioned to win in the long run in this category.
Okay, and is the CEO settled? Will it be the previous co-CEO? And are we sure that there was nothing wrong, say, with any of the bookkeeping? Because I know that your CFO was on the board, and he is among the best I've ever seen. So we want to be sure that there was nothing untoward.
No, there were no problems with the financials. And I would agree with you. David Klein is probably one of the best CFOs I've ever seen. And we're thrilled that he is both our CFO and is on the board of Canopy as well. So thank you for that compliment for him.
No problem. All right, now let's go forward here because away from Canopy, the quarter was extraordinary. I mean, you reaccelerated in a lot of different ways. You've got new products that are immediately contributing to the bottom line. What is the secret behind a reacceleration when we know that almost every other beer company continues to lose?
Well, we are focused on our brands. And when you think about the share of voice that we have today, while other people are stepping back from their investment, we are accelerating our investment against our brands. And there's probably no better example than Modelo, which actually accelerated in the quarter to a 17% growth rate. I personally say internally it could be our single biggest opportunity within the company. Modelo is absolutely on fire. But a lot of that comes from the fighting spirit advertising that we're doing, and we've never invested more against our business.
At the same time, I think we're still relatively early in the rollout of Special, correct?
Well, it is in the sense that it has a very strong core Hispanic group behind it. But in the last 2 years, we've seen a 60% increase in the number of non-Hispanic consumers who have engaged with this brand. But our household penetration with Modelo is still significantly less than Corona, as an example. So we really feel that the sky's the limit on Modelo.
Do you think the issues with Mexico and trade and tariffs are now behind you, or do you monitor every minute how the Democrats are, whether they're going to give the president a hard time? Because it is very meaningful for you to get this bill through.
Right. We certainly feel like the tariff issue is behind us. And as you know, our beers are authentic Mexican beers. They have to be made in Mexico. This was not a choice. This is where they have to be made from their authenticity standpoint. So we're quite confident that that's behind us, and we're quite pleased that it is.
Now, Refresca, and then I guess everyone wants Spiky. The Spiky, Boston's got it. I mean, is that something you can do? Because you guys have always been in the forefront. You're going to be at the forefront, no doubt, among drinkable cannabis. So these are things that we have to look forward to?
Well, Refresca is our focus for this year. And as you know, we just introduced Refresca nationally a little over a month ago, and we're thrilled with the startup. I was just with all of our beer sales leadership group today, and I'm telling you, to a person, they were excited by the potential for Refresca. It's a great product, and it is delicious. So our focus is entirely on Refresca this year and maximizing the opportunity around that particular sub-brand.
All right. Well, look, look, I'm unshakable that this is the best beer stock, and I feel better about Canopy, which, I recommended heavily after what happened, just because discipline is good. Discipline's good. All right, I want to thank Bill Newlands. He's the president and CEO of Constellation Brands. It remains my favorite beer stock, and Canopy remains my favorite cannabis stock. Mad Money's back in. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.